All right, we've got to talk about Tesla because the bulls and the bears are both drooling over this stock right now. I'm going to take you into the chart. I'm going to show you, of course, two scenarios. The bullish scenario of where I could potentially see a breakout and a potential buy signal that could develop through earnings and exactly what target that would give us. We have to examine the bearish scenario and what the breakdown might look like. We actually have been coming up very nicely, and overall there's still a bullish trend on Tesla. But this is a highly volatile stock, which means that the bulls and the bears ride this stock to profit each and every day, and we're going to do it again on this upcoming earnings. I'm going to show you the line in the sand on Tesla. Then we have to talk about the SPY again. We've been basically coming down a little bit. I expect us to potentially come down a little bit more, and because that's been the pattern in previous election cycles, that right before the election there's a little bit of a sell-off. Now the SPY is showing a ton of strength, and I think that has something to do with the rate cut that we got and the rate cut that we might be getting in November. There's a 99% chance that we're going to get another rate cut in November, and the market is watching what the Fed is doing. And what is the Fed doing? Well, he's easing, even though there's a ton of strength. And we don't have the bad data to suggest that unemployment is getting out of control or that these big tech companies are showing real weakness. Netflix gave its earnings and did very well. Tomorrow we're going to get Tesla's earnings, and if they do very well or they give a surprise or they beat expectations, then it's just going to be another big tech company not suffering the slowdown that the market is concerned about while the Fed is easing, which should be bullish for these companies as well as bullish for the economy. So far, the market's continuously made higher highs. The S&P 500 is continuing to climb, and it's not been that big tech has pushed us past all-time highs. We've done some consolidating in big tech, even though big tech is still strong. It's been that there's been more breadth to the rally. Now, the fact is, I am suspicious of what's going on with the Fed because he's cutting while the economy is showing strength, and there is the expectation of an inflation uptick going into the remainder of this year. Now, if that exceeds the expectation, it's going to freak some people out because we would be asking ourselves, why is the Fed cutting when inflation is going back up? Now, we don't have that data yet. We have to wait to see it. But let me just sound the alarm that what the Fed is doing is continuing to perplex me. I'd love to hear what you think about it. Should we be cutting right now when the economy is showing as much strength as it is showing? Now, underneath the current of all of that, I've got a report that I have to show you that just really should send some alarms. And I've shown some similar reports to this in the past, but this is about where the citizens, where we are all respectively with credit card debt. It has far surpassed 2008 and far surpassed 2020. When credit card debt has gotten this far out of control in the past, it has led to a very strong recession. And you know, I get in the comments section when I talk about some of the bearish undercurrents of this market, people are like, Josh, man, this market is just raging forward. And I do talk about the strength of the market, and then sometimes the very next video I'm talking about the potential weakness. But here's the point. I'm going to show you this chart, and then I'm going to make a very concise point that I want you to begin to think about, because in the next 6 months, you will remember that I said what I'm getting ready to say. Guys, you can see that we are in an unprecedented position here in 2024 with $1.142 trillion in consumer debt. I want to thank Ivory Hill for producing this chart. And you can see that when consumer credit debt has spiked the way that it has typically preceded a recession, a big downturn in the economy. Now, this represents the credit card debt, and you say that once in 2008, it was one of the triggers that was communicating that we were going to get a recession. Well, we know that it got pretty bad in 2008, and again in 2020, it was another indicator that when this spiked and exceeded 2008, it also led to a very strong pullback. And here we are again, not with a mild run up above 2008 and 2020, a huge unprecedented run up above previous debt levels. And so I just want to make this point after showing you guys that chart. There is definitely something brewing in this economy, and there's a problem ahead. So even though we are at all-time highs, and even though if we get a little dip in October, I do view it as a buying opportunity and a potential breakout moving into November. I believe we're going to get that blow off top. I believe that we're going to get up to 600, 611, or even 620 on the S&P 500. But I want you to be prepared after looking at that underlying debt problem that the average person is in. I want you to recognize that there's going to be selling into the rip. Okay, just like there should be buying into a recessionary dip. It's typically been wise to do that when the market pulls back 30%. It gives everybody an opportunity to get a higher return in the years to come. There should also be the awareness of selling into the rip of an all-time high. Now, I'm not calling that all-time high today. I really believe we're going to get above 600. I think there's resistance at 600. I'm going to show that to you in the SPY chart. 599 could be a point where we get right up to and some early selling occurs. But 600, 611, 620 is going to be that range, which I'm suggesting is going to be a sell the rip range. Now, I know there are people that disagree with me, and they're going to say, Josh, people have been calling for a recession since 2022. Or we already had the recession in 2022, but that's just not the way this Wall Street data works. While we have consumer debt reaching these kind of levels, the next thing that's going to happen is people are going to default, and they're simply not going to be able to pay off these cards, which is going to take a huge hit to the banks, and it's just going to affect all sorts of companies that don't ever get paid for what they sold. They're going to have to write these debts off, and it's all going to get reconciled in a bad run of earnings. Now, at the moment, I don't think that's going to be the quarter that we're in right now. I believe that the earnings that we're going to be getting are going to be good earnings, and with the backdrop of the Fed cutting rates and easing, it's going to seem and feel very Goldilocks, and it's going to give us the opportunity for this blow off top. But I want you guys to remember that I was focusing you on the idea of selling the rip, because in the future, when perhaps we're down 20 or 30%, I'm going to be having a similar conversation about buying the dip from a bigger perspective and not being afraid of the recession when you get the S&P 500 on a 20, 30, maybe even a 40% discount in the coming days. That's when we're going to have to shift and talk about long-term investing. And on that note, let's get into the Tesla chart, because I think that there could be coming up some attractive levels to buy. Even though Wall Street punished Elon for not giving enough detail or not bringing these products to the market fast enough, and so they sold off their shares, it was a buy the rumor, sell the news moment for Tesla. I think the fact is that Wall Street is interested in Tesla, and they're not going to let go of this stock. They're going to be looking for better price entries. And if this earnings turns out to be a sell-off event and the stock drops, personally, like a lot of people, I'm going to be looking to add to my long-term Tesla position, because I've said this before, okay? He's simply got too much cooking right now to ignore. Automated taxis and autonomous driving is going to come to pass whether we like it or not. And he's well positioned both with the infrastructure of superchargers as well as the technology and the branding and the ability to pull it off. There's going to be more deals cut, and this stock's going to fly. It's not ready to fly just yet. I think the market it's in a long-term consolidation here in 2024, and I personally believe that the base that it's forming is the price point of $200. And I think that we're going to stay largely above $200. And if we do any dips beneath it, those are going to be buying opportunities for me. All right, before I get into all that, this is the Stocks with Josh show. Thank you for joining me. Thank you for dropping a heart and saying hi in the comments and smashing that like. Hit the subscribe if you need help trading these choppy markets. I want to ask everybody if they were able to check out the first trading class that was produced by Airtwan and Miss Mary in the Stocks with Josh Discord. Let me know in the comment section if you enjoyed that, if it helped you. They're basically starting from a beginner's point of view, how to understand charting, set up your charts, and basics of charting for people that are just trying to build a foundation of long-term understanding of the markets. I'd love to hear your guys' feedback on that, and if you like more of that. Again, if you don't know what I'm talking about the Stocks with Josh Discord. We're doing crypto in there, we're doing penny stocks, we're doing long-term investing, and we're doing day trading and scalping. I'm day trading with the family on Wednesdays and Fridays in the Tier 3. Trade with me, learn the charts, and let's make some money together. Okay, let's jump into the Tesla chart. Okay, like I said, the bulls and the bears are drooling right now over Tesla, and I'm going to go over the important price points of what we need to watch. First off, this red moving average line is the 200 EMA, and it is classically understood that if price is above the 200 EMA, it's in the hands of the bulls. However, we have to note that we have recently come down from this run-up where price had gotten as high as 264 and come all the way back to the 200 EMA with a very mild bounce. Some could call it a dead cat bounce. And now tomorrow, we're probably going to touch the 200 EMA in the morning with price hitting around 214. Today, we ended around 216.95. And so it's very likely that tomorrow we will test this 200 EMA again. Now, we are in the hands of the bulls, and when the stock price is above the 200 EMA, we go to look at the MACD. Now down, when we're looking at the daily MACD, we see that it's curling up and it's beneath the zero line on the MACD on the daily time frame. Now, if this crosses over, the blue line crosses over the orange line, and price is above the 200 EMA, this is referred to as a classic MACD daily time frame buy signal. And so we could print a buy signal tomorrow. What we'd want to see to give us confluence with a bullish view of Tesla is we'd want to see the price come back above 220. I've talked about the fact that you want to be long on Tesla when the price is above 220, and you need, unfortunately, to be bearish on Tesla when the price breaks beneath 220. Recently here, just 2 days ago, the price broke beneath 220, and there was a huge opportunity to take puts from 220 all the way down to 215. That would have been a beautiful, profitable move. I do believe that we're likely to go lower tomorrow, test the 200 EMA, and pricing likely will go flat going into earnings tomorrow, and we are either then going to shoot up over 220 on good news or break down beneath this 212.90. Now 212.90, why is that price on my chart? Well, that's sort of an area that matters because that's this historic line that is previously served as resistance. Let's go back and look at that. So we're going to look at this long-term time frame on the daily chart, and this big yellow line I've drawn, this has been historic resistance. Over and over again, ever since the high of 2021, this line has served as a resistance zone for Tesla. But recently, we've broken through it with strength, right? And when you break a long-term trend line and you get above it, and this had been a long-term resistance line, it then can become a long-term support line. Now, we've been sort of vacillating around this price, but currently we're above it, and we're getting ready to test it again. And this is where we would expect it to be support. And so this could easily turn into support and give us the bounce that we're looking for. When price recovers above 220, it's confirmed, and the target then becomes an initial move back to 244. Now, that's the bullish view. The bearish view is that this historic resistance line potentially turns support, turns back to resistance. The 200 EMA, which is the red moving average line, gets broken. Price breaks beneath it, And the area that I've got marked on my chart as a stop loss zone is 211. So if we end up the following morning with price opening up beneath 211, it's very likely that we're going to be hitting 205 and 199. Now, here's one of the big points I want you to understand. I believe that 199 is an area of importance, and I believe that if we ultimately get back to it, for those who are interested in making Tesla a long-term investment, as I am, this is an ideal area to buy. And if you look at the chart from a perspective of price action, this has been making a series of higher lows, which even though the price has been very volatile, you got to remember we were able to buy this around 140 here in April of 2024, and we're still up at around 217. And so if we get back to 199, in my opinion, this is just going to be another higher low and bullish moment for Tesla. And so personally, I guess I'm presenting this in this way. I'm bullish to buy it on a dip. I'm bullish if we hold this yellow historic support, we hold the 200 EMA, and we get back above 220, I'm bullish for a move back to 244. And don't underestimate how strong of a buy signal that will be for technical traders if we do get the confirmations I just gave you, which would be a turn up under the zero line on the MACD, above the 200 EMA. The bulls are going to absolutely begin to run, and Tesla will very quickly get back to 244. And there's still going to be these long-term bulls that are going to be hunting for a better price entry on Elon's grand vision of robots, which he's come an incredible distance on. I mean, he displayed them for us in the We Robot event where these things came out, we're serving cocktails, having conversation. When he brings that product to market, it's going to sell, and we know that autonomous driving is the future. And we know just by watching SpaceX catch that booster, we know that Elon can accomplish the things successfully that he sets his mind to. So Wall Street is not doubting Elon right now. They're not doubting Tesla. They're looking for an ideal price. And that price ran up to 265 here recently and 274 not too long ago, because Wall Street believes that if Elon had been further along, then this stock could go back to all-time highs and higher. It's just a matter of time on Tesla. And as you can see, that even if price breaks down, I'm buying, and if price breaks out, I'm swing trading more. Okay, so that's my overview on Tesla. I hope it helped you. Let me know in the comment section what your thoughts on Tesla. Are you bearish? Are you bullish? Are you looking for long-term entries? And are you going to take a position with me if it comes back to 199? I'd love to hear all of that from you. Okay, let's take one more moment to talk about the SPY, because I think the SPY, I want to give you guys my line in the sand on the SPY and what I'm watching for over there. So let's go check out that chart. Okay, guys, I want you to see that 579.80 is sort of the important price point to be watching. This is setting up very, very similar to a setup that we had not too long ago, where we came back and ultimately bounced off of the 20 EMA and went higher. The markets have not broken down. So I see 579.80 as a potential area where this could bounce if we repeated this consistent uptrend that we've been getting above the 20. 579.80 is where we could bounce, and if we get above 588, then that's going to be driving us up to this $600 level on the SPY. However, 579.80 could also be an area where we might get a little bit of breakdown, okay? And if we do, the target of support that I'm going to be writing puts down to is 572. Now, if for some reason 572 didn't hold, and I personally don't see this happening, if 572 broke, then this would really change the narrative of the bullish SPY. I believe we're going to get a little bit of a dip, and I believe this market is actually very much poised to rip and is looking to hit this $600 level that's on the charts, that in my opinion we've already confirmed that we would hit when we actually broke above this 565 level earlier in the month of September. So that wraps it up for today. I think the SPY has a little test ahead of it here in this week or over the course of the next week. I believe that if we get that bounce off of the yellow moving average line, which happened to be the 20 EMA, then I think it's really going to be off to the races. I think that above 588 confirms the move up to that 600, 611 zone. Now, we already have a confirmation that we're going to get to 600 or 611, but what getting above 588 does is it tells us that it's going to happen sooner rather than later. That's how I see the charts. Again, let me know if you're bullish. I think we could get a little bit of pullback, but if these earnings keep coming out strong and Tesla is going to be the next test of that, then the market's going to run and it's not going to pull back, and a lot of people are going to feel FOMO and they're going to pile in, giving us the rip, which could be the blow off top, and it could be the spot where you should be considering reorganizing your portfolio and watching very carefully, because there's going to be selling into the rip. There's going to be some unwinding of large positions because this market's been running and we do have some problems. We've got some undercurrent problems. I'm going to wrap it up there. I hear some speaking on the intercom system above me. So this is a great place to wrap it up. I appreciate you guys joining me. I'm going to be doing some live trading tomorrow if my Wi-Fi permits. Hit that like and subscribe to get the next video. Peace and blessings. Take care. Bye-bye.